Welcome to the Weekly Rag for Sunday, December 2nd, 2007. The Weekly Rag is where we take the time to take a step back and get a better understanding of what's going on the larger time frame. When we look at our grid here, we're going to be focused on these farther to the right columns, the 26-week, 39-week, and 52-week. As you can see here, we're right in the middle of these ranges, so not a lot of optimism on either side. The Dow and the Nasdaq are doing just a hair better than the S&P. As we come down here to the caps, you can see the classic defensive situation. The large caps are outperforming the market just barely, and then you've got the small caps underperforming by quite a bit. The commodity area remains the only place people are really that optimistic of higher prices. As we pull up a chart of the S&P 500, it appears that we might have found our footing down here at this lower end of our channel we've been dealing with. The big pop that happened last week got rid of all those breadth indicators I was worried about. The Dow Industrials look to be in the same sort of boat. The Nasdaq is still in a position to form this higher low here, keeping its uptrend together, but it seems like a bit of a fight to do so right now. The euro gave its first sign of weakness after its big advance it's had. Same with oil, a big down week, and again hanging around this all-time high area. Gold gave everything back it had from last week's gains. The bonds gave a bearish type signal called a shooting star here last week. See how they ran it up in the early part of the week only to give the majority of the gains back by the time the dust settled? This type of candlestick pattern shows that the buyers could be losing steam. Looking at the grid from a sector standpoint, the areas with the most optimism remain to be these healthcare and this utility area. And you have materials and energy coming up a close second, with healthcare just kind of teetering on the edge. Your big weak areas remain to be your transports and your semis, followed by this consumer discretionary down here at the bottom. Transports and telecom are kind of down in the lower half. Looking at the trends right now on the sectors, we're basically equally divided across our sectors. We have a third of them in uptrends, a third of them in downtrends, and basically a third of them going nowhere. Your uptrenders start with the materials here. And again, a nice big move after finding that higher low. Energy is putting in a lot of real bottomy type candles. Technology put in this real volatile week you can see here, but by the time it all was said and done, nothing really happened. The consumer staples had the best week of all the uptrenders this last week. Now going over to the downtrenders, we start our list off here with transports, and it had a great bounce after breaking down through this support area. Semis seem to be trying to find a floor here based on this old floor that happened a while ago. The financials are now bounced back up to this old support area, which we're curious if it's going to become resistant. Same with the consumer staples. You'll see it's bounced back to that old support area, which again, we're curious if it's going to become resistance. Your sideways areas start off with the telecom. It appears to be at the lower end of this channel for the time being, along with the overall markets for that matter. The industrials drifting along sideways here seem to be trying to put in a higher low than the previous one. Utilities is nice here. You'll see it's at the top of its range. Sentiment is strong in this area. We'll see if we can't get through that with some conviction. Healthcare is in a position to put in a higher low here, as you can see, versus the prior low. The question is, can we get through these resistance areas? To sum things up, things are still pretty ugly out there except for a few pockets. The breadth indicators have resolved themselves. The question for the market is, do we head back up to the top of the channel, or does it stop halfway and make another charge at support? Whichever it does, it may take a hair longer as volatility seems to be slowing down a bit. I still feel that defensive is the way to go. Turn that margin off, run tight stops, and book money when you have the chance.